Thanks for tuning into Katina's Weekly News. Did you know that the majority of our viewers haven't subscribed yet? If you enjoy our content, I would be grateful if you could hit that subscribe button. It supports us and help the YouTube algorithm share our stories with an even bigger audience. Thanks for being part of our community. A bright note for the US banking sector to close out 2024. Major banks are reporting record-breaking Q4 earnings. JP Morgan led the pack with staggering 14.2 billion profit, while Goldman Sachs and Bank of America exceed the expectations. Wells Fargo also saw profit by 47% with steady revenue. The strong performance comes as a market rebound, bridging cautious optimism for 2025 despite lingering economic uncertainties. Analysts say the industry resilience is a positive sign for the broad economy. A warm welcome to some good news in financial world as we head into the new year. The semiconductor giant TSMC is shining bright with its impressive Q4 earnings. The company posted revenue of 26.88 billion, making a stellar 38.8% increase. The net income and earnings per share soared by an incredible 57%. Advanced 3nm and 5nm technologies led the charge, contributing a whopping 74% of the total revenue. And there are more good news. TSMC is optimistic about 2025, forecasting Q1 revenue between 25 billion and 25.8 billion. With the innovation at its core, TSMC continues to set the pace in the semiconductor industry. A bold proposal is stirring up conversations in Washington. Congressman Buddy Carter has introduced a Fair Tax Act of 2025, which seeks to abolish the IRS altogether. Instead of income taxes, the plan proposes a national sales tax, aiming to simplify the tax system and give the economy a boost. While the idea has sparked interest, its future in Congress is far from certain. Supporters say it could streamline the taxation, while critics are raising questions about its impact. One thing for sure, this is a tax debate that's bound to heat up in the coming month. It has been a tough day for the Nasdaq Composite Index, which slipped below its 50-day moving average, a key technical level that signals slowing momentum. Rising interest rates, economic uncertainty, and geopolitical tensions have all played a role in the recent decline. Looking ahead, markets are bracing for key updates, including inflation data, corporate earnings, and Federal Reserve decisions. Analysts are urging investors to trade carefully as volatility remains the name of the game. It is a reminder that staying informed and strategic is more critical than ever in these unpredictable times. Heads up for investors, analysts are forecasting the S&P 500 to peak early 2025, but the potential 10 to 15% decline could follow later in the year. Key market signals like the TRIN index are flashing caution as slowing growth, persistent inflation, and stagflation concerns weigh on the outlook. Experts are emphasizing the importance of staying vigilant and keep the portfolio diversified to navigate the expected volatility. While challenges lie ahead, a thoughtful approach to investing could help weather the storm. Let's look at the key economic indicators. PPI month over month December decreased to 0.2% versus 0.4% forecast, suggesting weaker pricing power for producers and potentially easing inflation concerns. API weekly crude oil stock reduced to negative 2.6 million versus negative 3.5 million forecast, indicating potentially increased demand or lower oil supply. Core CPI month over month December at 0.2%, It closely matches the forecast, reflecting stable price growth and likely maintaining the Fed current rate stance. CPI year-over-year December reaches 2.9%, slightly up from the previous month, signaling moderated inflationary pressure. CPI month-over-month December constant at 0.4%, suggesting steady inflation that may support the current monetary policy. Crude oil inventories decreased to negative 1.9 million versus negative 3.5 million forecast, potentially indicating higher demand or lower production. Continuous jobless claims slightly below forecast at 1.8 million, signaling labor market strength. Core retail sales month-over-month December missed forecast at 0.4%, indicating softer consumer spending during the holiday season. Initial jobless claims higher than expected at 217,000, potentially showing emerging labor market softness. Philadelphia Fed Manufacturing Index January significantly improved to 44.3, indicating stronger manufacturing sector growth. Retail sales month-over-month December weaker at 0.4%, suggesting softer consumer demand that could slow economic growth. Housing starts December exceeding the expectation at 1.4 million, reflecting the strength in the housing market. Industrial production year-over-year December rebounded to 0.55% growth, suggesting improving industrial activity. Next week, all eyes will be on the following key economic indicators and earning releases. First, we will look at the key economic indicators: 20-year bond auction, initial jobless claims, crude oil inventories, S&P Global Manufacturing PMI, S&P Global Services PMI. Those are the key economic indicators. Let's look at the key earning releases due in next week. Key corporations are Netflix Inc., Charles Schwab Corporation, Prologis, 3M Company, Capital One Financial Corporation, DR Horton Inc., United Airlines Holdings, Fifth Third Bancorp, Seagate Technology Holdings, KeyCorp. So those are the key earning releases we are expecting next week. Thanks for joining us for this week Katina Weekly News. Looking forward to see you in next week.